Bo. Welcome back to the Fourth Revolution. We'll talk about stocks for your portfolio of the future. We're talking about the recently compressed semiconductor space and the opportunity that a lot of these best positioned chip stocks have presented to us in recent days with this pullback, this growth-driven pullback fueled by a increasingly hawkish Fed in the face of this Omicron-driven inflation. And we have some earnings coming up that could present a springboard opportunity for some of these best positioned next gen semiconductors. And TSMC, the leading manufacturer of semiconductors in the world, making up nearly 60% of total manufacturing for this space and pretty much 90% of its total innovation, showing that this space is no longer the cyclical sector that the markets have become so used to. It is now a secular growth space that has so much upward demand and potential that it's boundless. I mean, we're seeing multiples in close to 100x PDE, and they're justified with companies like NVIDIA and AMD coming out with innovations that are just unmatchable in the space. And TSMC continues to support these innovations with its atomic level of manufacturing and fabricating that no other third-party manufacturer can match in this space. So let's take a look at some of the best positioned stocks after this pullback, with the S&P 500 now bouncing off that 10% correction level and headed higher. The S&P 500 is now above its 50-day, or should I say 200-day moving average, headed towards 50-day moving average. And I think the bottom is in for this correction, and it's time to buy some of these best positioned semiconductor stocks for the future, especially ahead of these earnings. Like I said, it can present a strong springboard opportunity for even a short-term trade. So let's take a look at the opportunities here, guys. This is the VanEck Semiconductor ETF. SMH is the ticker. This is the primary ETF for the semiconductor space. So you've had a huge amount of compression in January, coming down actually temporarily into bear market territory, which is over 20% off its highs. We're trading higher, now above the 200-day moving average with the rest of the market, as the S&P 500, like I said, put in its bottom last Monday. And buyers are coming into semiconductors as some strong earnings out of NXP last night and AMD tonight, which is going to be the leading, or should I say, incumbent in the CPU space as it takes market share from Intel. And I'm expecting to see big earnings out of them tonight, which would be a good innovation bid for the entire semiconductor space. And TSMC, like I said earlier this year, reported a record report that just showed that the demand for these new generation of chips is boundless. And the best positioned companies are poised to explode in this fourth industrial revolution. Qualcomm is an innovation machine in the telecom and communication space as far as chips go, and they're a leader in this 5G revolution that is a integral part of the fourth industrial revolution as we connect everybody. And they are going to be reporting tomorrow after the bell. And over the last 6 earnings reports, they have boomed with an average price action of over 10%, and 5 out of 6 of those being to the upside. So this could be a good opportunity to get in pre-earnings to this next gen tech leader that is going to take the chip market to the next level. Synopsys, SNPS is the ticker. This is a leader in design of chips. And like I said, with this boundless demand coming into the tech space, as we see 10 years of adaptation in a matter of 10 months during the pandemic, this pull forward with demand now, like I said, being boundless. These software companies that are designing these next gen chips that are continuing to innovate are going to be leaders going into 2020's booming digital renaissance. And Synopsys is a leader in this space. Them and Cadence have a duopoly, and they're coming into their earnings report. This stock is significantly off the highs it hit in the end of 2021, but now is the perfect time to jump in as it jumps above its 200-day moving average and heads towards new all-time highs into its earnings, which are going to be later this month on the 16th. Lam Research provides equipment for manufacturing semiconductors, and they came out with an inflation-plagued report, unfortunately, last week of January. But this is a good buying opportunity for the company as this knee-jerk reaction kind of pulled this way below its intrinsic value. as the demand for Lam Research's niche capital equipment production or products, should I say, is not going anywhere. Even if it's delayed, it's still going to be there moving forward, as their capabilities are kind of unmatchable. So this supply chain issue is not really, dissipating demand. It's more just pushing it out. So I still see this as a strong buy going into the rest of this trading year. My final semiconductor pick is ACM Research, and this company is primarily based out of China, with China building out its semiconductor capabilities, having grown its semiconductor production by 33% in 2021, despite its self-inflicted economic hindrance from fresh regulation in the tech space. But this stock is under the radar. Like I said, it's only has a market cap of 1.6 billion, which is a small cap company, and it's only a matter of time before this thing takes off. It's trading right above its 50-day moving average today, going into its earnings, which are going to be towards the beginning of the first couple weeks of March. Let's say March 8th here. This stock, I'm looking at price targets closer to 150, as China continues to invest in its semiconductor production. AMC, just like Lam Research, provides the necessary equipment for building out semiconductor production capacities. So this thing is going to see a huge boom going into the next 5 years as capacities are built out in China significantly, as the government wants them to be self-sustainable in the tech space. So I see this as a strong buy. This is my number one buy, but it's going to see volatility because of its low market cap, high beta profile. SMH, after temporarily dipping into bear market territory last week, is now above its 200-day moving average, like I showed you in the chart. So now is the time to get into this reversal, with S&P 500 putting in a bottom last Monday. I am very bullish on the semiconductor space going into the roaring 20s, with this digital renaissance expected to be fueled by the backbone of technology, aka integrated chips, which is what I've pitched to you today. So these stocks are long-term investments, long-term plays going into, like I said, the fourth industrial revolution. And speaking of long-term plays, we have a investor collection of portfolios for you guys to check out for some long-term opportunities at Zacks.com/promo.